Hello, everyone, and welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to get everyone a banking regulatory update, just to let everyone know, hey, what's going on in the regulatory world and banking right now. And I'm going to bring this up. So this is from the Independent Community Bankers Association. This is their first quarter 2024 advocacy and action brief. Great little document. It's just a simple 2-page PDF. Really does an excellent job of just summarizing what are the hot button topics, if you will, at the moment with regulation. For anyone who is in banking, if you are a member, if your bank's a member of the American Bankers Association or the ICBA, every banking association is going to put out something like this. It's basically going to be some kind of brief that's going to address the regulatory topics. If you don't look at this regularly, I highly suggest that you do. And even if you're not in banking, I suggest people go and take a look at this, because the reality is a lot of this legislation is going to affect your business, and it's going to affect you on a consumer level as well. So with that being said, let's take a look at some of these things that are going on here. So we have the CFPB overdraft proposal. That proposal right now is all about overdraft fees. What overdraft fees banks can charge to customers for overdrafting their account. I mean, it's a little bit of a very broad overview, but that's kind of it in a nutshell. ICBA is trying to basically reduce the impact of those rules on community banks that are less than 10 billion in assets. Then we have what's called the Durbin-Marshall Amendment expansion legislation. Now, this is a very fascinating bill. So basically, you had the Durbin bill years ago, which kind of regulated what like credit card processing fees and what could be charged and things of that nature. And so this bill, effectively, what it's trying to do is it's trying to, kind of I can't say eliminate. I don't think eliminate's the right word, but so I'll take a step back. I'll put it this way. So you've got the major credit card companies. You got like MasterCard, Visa, American Express, and they're basically controlling, 99.9% of all the payment flow and the payment transactions right now going through the system. And so what they're trying to do here with this Durbin bill is basically create another lane, an alternative route, if you will, and then other payment processors could get in on that highway and go in, kind of almost think of it like two parallel roads next to each other, where you got Amex, Visa, and MasterCard over here, and then you've got all these other little players over here. It's very interesting, because I think in theory, it makes a lot of sense. In practicality of how it's going to be executed in the real world, I don't know. I don't know how that's really going to work out. But again, something interesting to keep an eye on. We also have strong support for the ILC loophole bill. So the Industrial Loan Company, or the ILC loophole, allows big tech and commercial companies to own essentially full service FDIC insured banks while evading holding company supervision. The ICBA is promoting bipartisan legislation that would close the ILC loophole, grandfather existing ILCs, and address pending applications. I have been a strong proponent of getting rid of the ILC loophole for quite some time, and I do hope that this goes through. It appears that this legislation does have bipartisan support from both parties, so I would keep my fingers crossed that hopefully something will happen there. Farm Bill and support for agriculture. So ICBA is aggressively advocating for rural community bank priorities, recommending 6 key principles for a new Farm Bill, which is now in development. So these priorities include ample funding for commodity programs, rural broadband, and crop insurance. So ICBA also advocates for higher USDA guaranteed loan limits, a USDA Express program, and other program enhancements. And then ICBA strongly opposes expansion of the farm credit system into non-farm lending activities. So hopefully, I do think that would be a good bill and a prudent bill. So we'll see what's happening there. So what's going on over here? So on the far right here, we have real results for your bank. So FDI special assessment relief. So okay, what happened with that was that the 4 banks that failed in March and April of last year. When a bank fails, that takes a hit to what's called the FDIC insurance fund. And when you have a hit to that fund, they have to then replenish them. And they usually replenish that through what's called a special assessment. They hit basically, every bank in the company every bank in the country would get hit with a special assessment, and everybody would have to pay in a percentage to replenish the fund. Well, basically the advocacy was that, hey, look, this was kind of a regional bank or a big bank problem, if you will, and that, small community banks shouldn't have to pay into this special assessment. And that is kind of how that worked out there for the most part. And so the bigger banks had to kind of pay in with the special assessment to replenish the FDIC fund. And that's kind of what this says here. So if we go here, so the FDIC finalized a special assessment triggered by the failures of Silicon Valley Bank and Signature Bank. In response to ICBA's advocacy, the assessment exempts community banks with uninsured deposits of less than $5 billion, meaning these community banks will not pay a penny of the $16.3 billion in special assessments collected by the FDIC. So there you go. Congress rejects the 1071 rule with strong bipartisan support. Both the House and the Senate passed a resolution in the fall to nullify the CFPB's final rule under Dodd-Frank Section 1071. President Biden did veto that, but its passage by Congress will nevertheless help to highlight and advance community bank concerns with the final rule. So, there's still a lot to be. So basically what the 1071 rule is that it was part of the Dodd-Frank Act from way back in 2010. And what this is all in reference to is basically data collection, collection of a number of data points, particularly around small businesses. It's just, I think it gets back to the fact that it's just more regulation. It's just more data that the government's requiring, and the government's never ending lust for more and more data, more and more information on every man, woman, and child in this country. So we'll see how that goes. So obviously, President Biden vetoed it. So at some point, this thing that 1071 rule is going to kick in. But we'll see. We'll see what happens here down the road. So, and then finally, as we get to page 2, what are some of the other things that are in here? So we got tax incentives for community bank, agricultural, and home loans. Central bank digital currency. The ICBA opposes a U.S. central bank digital currency, which would compete with community bank deposits needed to fund local lending and undermine consumer privacy, among others. Yes, I am absolutely right there with it. I oppose a central bank digital currency 110%, and I pray every day that does not come to pass. And I'm working on an episode right now all about central bank digital currency, and I'll get into that. So cannabis banking, ICBA supports legislation that would create a safe harbor from federal sanctions for financial institutions that serve cannabis-related businesses. We got restriction of the sale of trigger leads. Okay, so this is an interesting one. So for anyone that applied for a mortgage in the last couple of years, so you applied for the mortgage, and then banks have to pull a credit report on you. So when the banks pulled the credit report, the credit reporting agencies were then selling those leads to a bunch of marketers, and then you would start receiving this influx of phone calls from all these other mortgage companies around the country trying to get you to basically take a mortgage out with them instead of the person you were working with. So, I actually experienced this myself about 2 years ago when I was looking at doing something, and applied for the mortgage, and then boom, next thing I know, I was literally got 25 phone calls in one day, and I was like, why am I getting all these phone calls? What's going on here? And this is something that's I think relatively new. I mean, I don't remember this happening 5 years ago, 10 years ago, so again, they're trying to put through this legislation here that would basically, restrict the sale of these trigger leads, so that when you go to apply for a mortgage, you're not going to get 1,000 phone calls, kind of ridiculous thing. Crypto assets, decentralized finance, again, still hashing out over regulation about, how to regulate cryptocurrency and stable coins and things of that nature. And I don't know, that's very interesting, because we've been this talk. And that's all it is talk. It's just this talk of this regulation has been going round and round and round for the last couple of years. If you want a little bit more background on the whole crypto thing. I have I have a 4 parts of a crypto series I put out. I'm working on a couple extra parts to that'll be coming out soon. But if you're interested in that, you can go check that out for more information there. SBA lending and non-bank fintechs. ICBA strongly opposes an SBA final rule that will allow non-bank fintechs to originate 7A loans, thereby increasing fraud risk and defaults. Yeah, I probably need to do a whole episode on like the SBA lending and just the different products, but also some of the more interesting things that have been going on with that. They want to open up kind of SBA lending to a lot of different, fintech companies to originate loans and things like that. There are absolutely a lot of pros and cons with that. We'll have to, but we'll have to get in and I'll have to get in and dig into that much more in depth. And then finally, we have Section 1033 exemption. ICBA is seeking accommodations for community banks in the implementation of its Dodd-Frank Section 1033 rule. Specifically, ICBA is urging the CFPB to exempt community banks with less than 850 million assets, small businesses as defined by the Small Business Administration, from a requirement to create and maintain a third-party developer interface. Now, what is this? This is open banking. If anybody has not seen my episode on open banking, I would also instruct people to go check out my episode on beneficial ownership information, BOI. But this in particular, the Dodd-Frank Section 1033 rule, this is open banking. I'm highly opposed to open banking. I don't like this. I don't think it should be done. I think banks are really, I think the industry is really asking for trouble by implementing this. I think it's going to open up a whole can of problems with cybersecurity. Again, like we don't already have enough issue with cybersecurity. You're gonna throw this in there. So, but again, go check that episode out and see what you think. And then finally, we have prescriptive and intrusive FDIC corporate governance proposal. So in December, the FDIC proposed troubling guidelines that would raise the bar for the independence of board members, making it harder to recruit qualified directors and heighten liability risk for bank directors and officers, among other adverse changes. The proposal would apply to institutions with assets of $10 billion or more, though the agency would reserve authority to apply it to smaller institutions. So that, again, is another very interesting piece of legislation that's out there right now. I mean, obviously, I shouldn't say obviously, because it's not obvious to a lot of people, again, that are outside the industry, but being on the board of directors for a bank carries a lot of liability with it. You're responsible for a lot. I mean, if that financial institution goes under, you could be on the hook personally for a lot of the damages and things that go on. You could get sued for, criminal and you could go to jail. I mean, it's not just a financial issue. It's a, you could have criminal liability there depending on what happens. So, and what happens is obviously if there's more liability, it makes it harder to recruit, people to come and get on the board and serve as board of directors on banks. Because again, to use the juice isn't worth the squeeze at a certain point. In other words, whatever compensation you might be gaining from the bank, it's not worth the risk or the liability that you're going to take on to perform those duties. So anyway, that's basically a kind of quick rundown, regulatory update on kind of what's going on here. ICBA, they put out these great little pieces every quarter, so I would highly recommend people go check them out. Make yourself aware. And I think that this kind of thing is perfect for that. It's just a little 2-page document, gives you a quick overview of what are all the main kind of important things going on right now. So just go on, check that out when you have time, and just bring yourself up to speed on what are the different regulatory hot button topics at the moment. And so again, I think it's a very helpful thing. It'll help you understand just kind of what's going on. So, but I hope everyone liked this episode today. Please make sure to like, subscribe, and share. It always helps the channel. Please keep an eye out. I have a couple of other episodes coming out today with what do I got? I got the weekly banking update will be coming out. Some of the other things, I did a quick episode on AI and how that affects. We're going to be talking about regional banks, and we're also going to be talking about treasuries. So I hope everyone will tune into some of those other episodes, and I will see everybody again real soon. Thanks.